Yes. Good evening, everyone. Welcome to Currency and Commodity Research Club. This is a live show on currency in motions covering dollar index, USD/INR, Euro, GBP, and JPYINR. So let's quickly start with the session. We'll start with dollar index. Dollar index has rose above 102.50 due to last week optimism and hawkish tone. Traders are assessing global economic and monetary policy outlook while monetary events in Euro. So data showed a slowdown in US private sector activity and dampening contraction in the manufacturing sector. So the dollar index gained about 0.5% last week, ending the 3 weeks decline. As aggressive monetary tightening and hawkish messaging from major central bank raised concerns about the global economic slowdown, leading to increased in demand for the dollar as a safe haven. And also, the Fed Chair Powell indicated further rate increases, which is likely to due to high inflation, while European Central Bank raised their rate by larger than expectation. And overall, technically, dollar index is currently trading above its 50 daily moving average, and which is positioned near 102.70 level. This indicates a potential upward movement towards a level up to 103.05 to 104.07 levels. However, if the index drop below the level of 102.30, it may experience some sideways to downside momentum, and the support level is at 102.40 to 101.98 level. Let's come to USD/INR. The Indian rupee has the best performing currency among those that saw losses last week. Unlike the rest of Asia, the Indian rupee is not affected by the weakness. The market are realizing that the fight against the inflation is ongoing, and the current rate hike could potentially lead to global recession in the near future. So the shrinking interest rate differentials between the US and India has caused the rupee dollar forward premiums to plummet. So this decline in forward premiums or the low carries may affect the exporter, as they are getting the unfavorable USD/INR rates when hedging the dollar receivable. Technically, USD/INR spot is trading below its 200 daily moving average, which is near 82.10 level. So where the immediate support is near 81.80 to 81.65 levels, and resistance is at 82.10 to 82.28 levels. It could trade within the range of 81.70 to 82.20 level in coming sessions. Let's come to Euro INR. Euro rallied earlier in the week but ended on a soft note after a sell-off on Friday following poor purchasing manager index data in Europe. Euro was bullish when US dollar strengthened. Possibly it was influenced by the disappointing UA statistics, and factory activity in June reached to the lowest level of 37 months, indicating the intensifying manufacturing recession. Eurozone PMI showed a significant softening in the service sector, indicating further contraction in output. So the deteriorating growth environment raises the concern that it may affect the euro as a currency. So future economic reports such as German business climate survey, German's consumer confidence, and Eurozone CPI will provide insight into monetary policy outlook. And technically, Euro INR July future is trading below 50 daily moving average, which is placed near 89.72 levels, below which could see a sideways to downside momentum up to 89.30 to 88.90 levels, where the resistance is at 89.70 to 91.50 levels. Let's come to GBPINR. The British pound rally may face some minor setback after the Bank of England surprises interest rate hike. The rate increase to 5% was higher than expected, citing the prolonged effect of external cost shocks, the domestic price and wage development. So UK headline inflation remain unchanged, which is 8.7% in May, adding to pressure for a central bank to take action. The Bank of England had previously raised its benchmark rate by 25 basis points in May, following a pause in April. So, market expectation now suggests a 50% chance of benchmark rate peaks near around 6.25% by the end of the year. And also positive UK data has leads to upgraded economic growth forecast for this year. However, the overly aggressive tightening from the government may change the impact next year prospection, increasing the risk of recession and potential weakness in the British pound. So technically, GBPINR July is trading on a sideways momentum where breakout above 104.70 will continue its positive momentum up to 105.1 to 105.72 level, where the support is near 104.10 to 103.35 levels. Now let's come to JPYINR. The Japanese yen weakened last week due to Fed Chair Powell hawkish testimony and declining Japanese CPI. The Bank of Japan faces challenge in shifting from its loose monetary policy, but changes to yield curve control remain a possibility. So, upcoming week will be focused on US centric data, including the core PCE print, durable goods order, GDP, and Michigan consumer sentiments. Powell speeches are expected to continue the part of policy tightening. If US data indicates a slow economy, recessionary fear may benefit the safe haven status of Japanese yen. Technically, JPYINR will continue its sideways to downside momentum up to 57.35 to 56.70 levels, where the immediate resistance is near 58.40 to 59 levels. So, thank you for staying updated with the latest information. If you find it useful, we kindly ask for a support by liking, sharing, and subscribing to our channel. We'll return next week with more updates. Have a wonderful week ahead. Thank you for your ongoing support. Goodbye.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.